Hello guys, this is Jamie and welcome back to the next cryptocurrency trading tips episode. Today we are going to be going over BitMEX. So what is BitMEX, I hear you ask? This is a site or an exchange where you are able to margin trade. So what does that mean? So margin trading is where you almost borrow money from the exchange or the broker in order to then trade with it. So it's not something like you can go on and start with like $10,000 that you borrow. It just doesn't work like that, but I'm going to explain the very basics of it today, and in future videos I'm going to be going over much more to do with it and some strategies and things like that for making money on this. So if you do follow the channel, you know I'm doing a $5,000 to $1 million challenge in a year. So this is something that we are going to be doing quite a bit of now. We're going to be using BitMEX because it means we can short as well as long. So I'll go over that in a minute, but this is what you will come up with as you come on BitMEX for the first time. I do have it set up a little bit differently. All of these are just indicators. You can use the order book, recent trades, and the chart as well. So I'm going to go over some of these in a minute, but I'm going to get logged in. So this is me here. I am logged in. So currently I have about $1,000 on here. Not too much, but we are going to be going over the very basics of how to long and how to short on here. So you notice I do not have a chart for the price on here. Now that is because in this monitor, on this tab, I have it here. I normally have this on a different monitor to my main trading one, which is this on BitMEX. But yes, this is the chart. It's different to a different normal chart. It's the Bitcoin to US dollar perpetual inverse swap contract. But it does pretty much look the same as them. So you can see here, it looks pretty similar to all of the charts. So that's Bitcoin to the dollar on Bitfinex, Bitcoin to the US dollar on Coinbase, and Bitcoin to Tether there on Binance. So the chart is very similar to the rest. All it is people just trading differently. So when you're analyzing trends, then make sure that you use others as well, like Bitfinex, Coinbase, and Binance charts. So those are the three main other ones. You have got a few others, but I'm not going to go into that. So when you're analyzing the chart, make sure you get multiple ones. So what am I using here? This is TradingView. So I'll put a link to that down in the description if you would like to go and have a look at TradingView. So anyway, we're going to go back onto BitMEX now. So what can you do on BitMEX? Like I said, you can either long or you can short. So if you're longing, then you believe that the price is going to be going up. So therefore, you are buying Bitcoin and then with the hope of then selling it at a higher price. And if you are shorting, what you are doing is you are selling Bitcoin, not necessarily your own. You'll be using leverage. So the leverage is how much extra money you are borrowing in order to put into the trade. And shorting is when you sell Bitcoin using that leverage or just the amount you have in your balance, and then with the aim of buying back in again at a cheaper price. So we are going to go over a quick example here. So it looks like the price Bitcoin is going down a bit here. We can have a look here on the chart. I'm going to pull this to the 1 minute chart. We can see it's going down a little bit here. So I'm looking at this chart. I have no idea what it's going to do because I've not looked at it hard enough. But for example, let's say I thought we were going to be going down in price. So what I'm going to do, I'm going to want to sell $500 worth of Bitcoin. But I only want to put in $50 into the trade. So what we go up here first, you can use market if you want to just do it at a market price. I tend to use limit because it's much easier. So we are going to put in $500 because that is how much Bitcoin we are going to want to sell. We are going to do a short. So we are expecting the price here to continue going down. So put our $500 in there. Our price at which we are going to short from, so that's yes, the current market price, which would be doing it anyway, which is around here. And wow, we're in fact going up a little bit here. So maybe it wouldn't have been the right call to short there. I guess you just got to look at the chart and see. So we can see here that normally this is going to cost us 0.0715 Bitcoin. Now I only have 0.14 Bitcoin, because I have about $1,000 in my account, and of course if we are going to use $500 of that to short, then you can understand why it's just a little bit more than half of our balance. So for example, now we want to use some leverage on it. We don't use all of our money because we're going to save that So what we're going to do, we're going to click on 10 times. So what that means is that now we can see that the cost is only 0.0072. So what that means is that we are going to be using a lot less of our own money to put into the trade. In fact, only a tenth of it, of the total amount. So we'll be putting $50 into the trade, and because we put it on 10 times leverage, we're then going to be able to have $500 in the trade. So, for example, now we want to short, so I'm going to put a short. So I'm going to click where I want it. So let's say we only want 50, for example. I'm going to decrease it a bit because I'm not too sure what the price is doing. I don't want to lose too much money with this example, and then we're going to click short. So we can see here that that's our order there. Ah, yes, and it went through. You see that quickly turned yellow. And then we can see here in our active orders that it is green here, so that means it went through. It was a limit order. Its status, it was filled. So we can see the order value there, 0.0071, and this now is under our open position. So we have a short open on Bitcoin. So we are betting that the price is going to be going down. We can see this by it being red. So, and it's being minus 50. So we've sold $50 worth of Bitcoin. Not all of ours. We only sold $5 of our own, but borrowed more because we're using 10 times leverage. We're borrowing 10 times our amount. And then what's that meant is we've been able to do it with a larger amount. So we can see the value, that's the value. The entry price, that is what we opened it at. The mark price, that is the average price between a few other Bitcoin exchanges which Bitcoin are on. We've got the liquidation price. So what is a liquidation price? So that is, because we have borrowed money to go into this trade, what it means is that at a certain price, we're going to have lost more than 10%. So we only put 10% into the trade. So therefore, when we have made more than a 10% loss, so let's say we've shorted and the price has gone up 10%, then what it's going to do is it's going to liquidate us, because we are borrowing money from the exchange, and what the exchange doesn't want to do is make a loss on your trade. So they will liquidate you, and you will lose your 10%, and they will keep their 90% that they put into the trade for you. So we've got our margin here. This is how much we got. 10 times there. If we hover over it there, then we'll see we've really not made any money on this trade yet. Because the price is still roughly the same. But as it goes down, we'll be able to see, we can see that we've made 0.07% and 0.14%, now 0.7%. So it's been a successful trade so far, 0.7%. We've not realized any of that yet. So we can see that therefore we are doing well, the price has gone down, and let's say we now want to close it. So I'm going to click on a price in the order book. I want to close my short at $7,003. We got our 50 in there because that's our contract size, and we're going to do the opposite this time. So I'm going to click buy long. We can see it in there. So now once the price hits that, then it's automatically going to close it for us. So we can see it's in here. This is it. We're going to buy back the contracts that we sold when we shorted. We've got 50, the price, remaining 50 because it's not been filled yet, our order, and yes, there we go. So we're just now going to wait for that to fill, and then we would have closed our short and made a profit on it. So there we go. I did just close it at the market price instead. So I closed it at $7,004, and we can see from the chart here, we shorted from about there, and we closed it there. So that is a profit if fees weren't taken into consideration, but there are fees, and sadly, I do not know whether we would have made profit on that because it was such a small amount, but it doesn't really matter. But remember, the fees do eat up quite a bit, especially if you're market opening and closing your position. So if you limit buy and limit sell in the order book, so for example, if we put our long in here, if we were going to long now and we put it in the order book at one of these prices, then the fees would be lower than if we market bought it into that there. But if you do want 10% off your fees, if you want to try this out and you want to get 10% off your fees, there's a link down in the description to BitMEX. If you click that link, it is a referral link, so I think I get 10% off my trades as well, which is very good, and so do you. So it's mutually beneficial. We talked over shorts there, and long is pretty much the opposite. So let's say you think the price is going up, then you'll buy a load of contracts, and then when the price has then gone up, then you will close your contract, and you will be at a profit. So for the leverage, what do I recommend? I really do not recommend more than 10x unless you're very good at this and you know exactly what you're doing. So one reason I might think you might want to use more than 10x is, let's say we break out of a trend line like this, and the price coming down. You can see we've come out of the trend line there, so you might want to maybe 25 or 50x short there and make quite a bit of money on that. But that is something more professional traders or much more experienced traders would do. They would use much higher leverage. Now, I don't recommend using more than 10%, and more recently I haven't been as well, because the higher your leverage is, the lower or the closer to the current price your liquidation price is. And if I can tell you one thing, you do not want to be liquidated. But let's say, for example, you haven't got any money in Bitcoin, but you want to try it out, then don't worry, there is also a testnet. So this is testnet.bitmex.com, and on here it is not as good as the main one because you've just not got the same kind of liquidity, but you've got the same markets here roughly, and if I was logged in, then I'd be able to see exactly the same things, and you're able to try it out on here first. So this is like a little bit where you can go and test it. If you want to start, maybe do some paper trades on here, just see how it works out. So anyway, guys, I'm pretty sure that's going to be it for today's episode. If you have any questions on this, any questions whatsoever, leave a comment. I'm going to be going over a lot more in other videos. We can see we can also trade a load of other coins on here, whether that be Cardano, Bcash, EOS, Ethereum, Litecoin, Tron, or Ripple. I'm going to be going over some of those ones in other videos as well. But anyway, guys, thank you so much for watching. If you did enjoy it, feel free to leave a like. It's always appreciated. Subscribe, of course, if you are new. And I am sorry I've not done any of my weekly trading videos. The trading from $5,000 to $1 million in a year. I've been incredibly busy and haven't really been able to. So I think in about a week's time, I'm going to be starting those again. And I think I'm gonna pause the weeks as well. I'm gonna start again on week 2 or 3, I think it was, where we left off. But anyway, guys, thank you so much for watching. I'll see you in the next episode. Goodbye.